Hey guys, what's up? Alec back with the daily stock market, and look at that. We're up $300 on the day. It's due to Ethereum is up 10% on the day. So if you want more cryptocurrency updates, make sure you follow the daily cryptocurrency on Instagram for all your crypto updates. But this is going to be your stock market update for today. We're going to go over 5 to 10 different stocks to have on your watch list, and some hot controversial stocks are going to be on the list today. So make sure you watch this entire video if you want to hear all my candidate thoughts on a lot of different stocks like AMC, Nike, Disney, Twitter, and a bunch of other stocks as well. So make sure you just stop right now, hit the like button on this video, smash the subscribe button if you're not subscribed yet, and comment below if you are subscribed. So first up on the list, we have Nike down 6%. A lot of people are going to look for a swing trade on this one because they're down also 11% in the last month. And if you go and scroll out to the last year and zoom out, what you'll see is they had a resistance right around 147 or 146. And that was a pretty resistance for them right now, 145 earlier in the year. So it looks like they're going to be having that as their new support instead of their resistance. So around 145, I think, is a good swing trade up to new all-time highs. Nike is a company that's going to always be hitting new all-time highs year in, year out. They are a longer-term hold, though. Typically, they are a longer-term hold, but since they are getting close to that support, they might be a good swing trade to add right now. Here we see Nike reported strong results for Q1 2022, but the company guided to a dismal holiday season. The athletic apparel company cut 2022 growth rates in half to only mid-single digits. So imagine a company saying, oh, it's going to be this, but they actually cut it in half and said it's only going to be in the single digits. Factories closed in Vietnam can't reopen in time to manufacture footwear or apparel capable of reaching North America markets prior to the holidays. Okay, so that's typically retail's huge time, and they can't make the deadline of the holidays, which is going to be a bad thing for the next probably 3 months at least for the stock. So hopefully we will see Nike go to 52-week lows because it'll create more buying opportunities. The stock faces multiple compression along with flat EPS growth to where a 30x multiple, still aggressive, leads to a price target of only $107 per share. Okay, so he's saying that the intrinsic value, the value of the company, is really only $107 per share. The market was already overpricing the value of Nike heading into the earning results, despite the knowledge of supply chain issues with Vietnam factories closed during COVID-19. Investors probably can't be blamed for looking past these issues after Nike had soared past expectations the prior quarter. My investment thesis is ultra bearish on the stock price for perfection, now facing an obvious period of prolonged weakness. Now, if we put what one analyst is saying aside and look at what a majority of analysts are saying, they're saying a 23% upside over the next 12 months. Keep in mind the analysts we were just looking at in the articles, they were actually looking a little bit more short-term over the next 3 to 6 months. These analysts are looking over the next 12 months. So if you are a longer-term investor, Nike is going to create some good buying opportunities. The lower it goes under $150 per share and closer to $100 per share are going to be some great buying opportunities. The lowest analyst has Nike at $160 per share in the next 12 months. The highest has $213, and on average is about $185 over the next 12 months. And these are all five-star analysts as well. Citigroup, Piper Sanders, BMO Capital, all saying $175 per share over the next 12 months. And they just reiterated all of this stuff 3 days ago. So these are very fresh analysts. You even see one from JPM Morgan, $192 per share. So if you're a longer-term holder, Nike could be a good one the lower it goes. Now, as far as AMC is concerned, they're at $40 a share currently, down 6% in the last month, down 27% in the last 3 months. It looks like they're having a little bit of a comeback. We were trying to buy under $30 a share. They only went below $30 a share for a very brief amount of time on August 4th. Now, you can actually see that support is right around that $30 mark, so we're going to be patient a little bit, wait for that $30 mark. I know a lot of traders are trading it right now because it did have some upward momentum from August 4th all the way into September 10th, basically a whole month of a bullish trend. Now, it's pulled back a little bit from $50 per share, but a lot of traders are going to run some options and some heavier swing trades trying to get back to $50 per share. I think that's definitely possible, but in my opinion, again, closer to $30 a share or even under $30 a share is where I personally want to be buying. Now, the next one on the list we have is Twitter, and they're at $67 per share. They're up 10% in the last week, and they were sitting below $50 per share for quite a while, and they revisited those markings even earlier this year, $50 per share when we were buying Twitter. Now, we already sold a lot of our profits when they went back up to $65 per share and up into the 70s. They pulled back a little bit, but now they're starting to bounce back. So the question is, will they go back under $60 per share? I think so. That's where I typically want to buy, but you can see this pattern that Twitter is setting up. It's a very fundamental one right here. You can actually see, look at it hit that support line every single time, all right? So it's probably going to be following this trend line, and it's going to be a big deal if it breaks out above it or below it. You can even see right here, we've seen it break out before, and we've almost seen it testing the support line down here as well. It's bouncing up into this, up to the resistance once again. So there is a good chance it will bounce off the resistance, come back to the support line, and hopefully come to around $60 or $62 once again. But remember, we saw a big outlandish rise above the trend line, and then it come down. So the question is, can we see a big bullish it go below the support line? All right, so my technical traders can look into that. But with Bitcoin going lower, and if Bitcoin continues to dip, it might be affected a little bit on Twitter, and hopefully Twitter can go down to $50 per share once again. We'll see, despite blowing out Q2 earnings estimates, Twitter is trading 10% down from July 22nd. This article was wrote in the beginning of September. I think it was September 10th, by the way. So just keep that in mind. Twitter can put together people with different interests. That's what makes it unique. What amazes me most that Twitter is a $50 billion business. I wouldn't be surprised if it doubles. Keep in mind, all these other ones like Apple, Amazon, Facebook, they're all like $1 billion to $2 billion businesses. Twitter's only a $50 billion market cap right now. Twitter's forecast grows for the next 10 years. It could be quite impressive. EPS will grow at a compounding annual growth rate of 21% during the next 8 years. Wow. All right. So that's a pretty good bullish thesis. Social media will benefit from digitalization, growing online advertising, and so on. The industry outlook is very positive. Facebook is the king of social media realm. Twitter is way less dominant platform. Twitter still has highly engaged user base. However, you guys know I'm a Facebook guy overall, but I could be looking into Twitter, especially with some things that they're looking at with Bitcoin. Facebook is the better quality pick amongst the two, and its valuation also looks more favorable. So we'll also do a deep dive into Facebook later on this week because it is going down a little bit, and I want to buy under $300 for Facebook. I'll just tell you guys that right now. But the new Twitter integration will drive the Bitcoin price above $300. This Google NASDAQ article is actually saying, and this was just published, $300,000 for a Bitcoin. All right, that's pretty bullish. I would say $100,000 would be awesome for Bitcoin to get above. But if you guys actually do a little bit more of a deeper dive, what's going on with Twitter and what they're trying to prove is like a lightning, instantly be able to send money anywhere from one user to another. So just like Venmo, Cash App, e-transfers, all that stuff that people use to get money back and forth instantly, Venmo and Cash App can only be used in the United States. instantly, okay? So Twitter can be used around the globe. So if you're able to send Bitcoin around the globe instantly, no waiting, no processing time, it's just like a Venmo or a Cash App, you instantly get it. You don't have to wait on the nodes or the confirmations or the miners or anything like that. If you have a Twitter account, they're making a new thing where you can just shoot Bitcoin from Africa to India to the United States to Australia, all out of a snap of fingers, just like your Cash App, just like your Venmo, but making it worldwide under the Twitter platform. So that's why everyone's so bullish right now on cryptocurrency, Bitcoin, Twitter, especially with there's talks of an ETF, a Bitcoin cryptocurrency ETF coming that's going to be approved by some official people, so keep that in mind as well. Twitter has officially enabled third-party Bitcoin tipping service for iOS users, giving them the ability to seamlessly pay one another across the globe nearly instantly. So that's the game changer. It's never been done before. You know, if people living in India, for example, are in the United States or somewhere else in the world and they're sending money home to India, they have to use like Western Union and other services that take like 7 days for the money to process and get back to their families, where this would allow them to send it instantly. It's like a Venmo or Cash App. And make sure you follow me at the Daily Cryptocurrency on Instagram, because we'll definitely be covering more of this story. Now, the next one I'm looking at this week is going to be Visa. And I just want to add this to my long-term portfolio. They're up 6% on the week. I've been adding them consistently because remember, they were down pretty good. And we even did a call option on them and made a lot of money. Some people, students, even made like 100% gains on that call option. So if you were buying around 220, that was almost a perfect time. They're already bouncing back. This is a long-term portfolio, a good one to add into your Roth IRA for long-term. All right, so this is a long-term hold. I definitely want to be holding this one for at least 2 years minimum, if not 5 years or longer. Visa's the biggest credit card processing company in the world, over MasterCard, by a long shot, over Amex, over any other processing credit card. And credit cards are obviously going to be used in the near future, 2 to 5 years. So that's why I'm investing in them. Here we have the analysts, what they say. The lowest that any analyst is saying, 250 over the next 12 months, which is a very safe stock. You're not going to be losing any money. It's going to be better than sitting in a savings account. Guys, I'll say it again. It'll be better than sitting in a savings account if you put it into Visa over the next 2 years. Okay? This is not for short-term investors. If it dips, I'm buying heavy. All right, so we see 280s average 21% upside over the next year, which is phenomenal. And some analysts even have it as high as $300. These are all 5-star analysts: JP Morgan, Morgan Stanley, Bank of America, Credit Suisse, all have them above $270 per share over the next 12 months. Okay, so let's keep the train moving because I want to cover a lot of stocks for you guys. A lot of people are asking about Peloton, down 8% in the last week, down 20% in the last month, down 24% in the last 3 months. Is it a buying opportunity? Right now, it's at a 52-week low, all right? And I think it looks like it's following the support pretty closely with a little bit of outliers here and there. So as long as you're buying below that yellow support line right there and selling above this yellow resistance line, I think you can easily make some money with Peloton. I'm giving you guys the keys right now. That's why you're subscribed to this channel. I just drew the yellow lines for you guys and showed you where you should be buying and where you should be selling if you're a swing trader. All right, below $100, which right now we have a Peloton stock below $100. And if you're selling above $125, that's going to be about a 30% swing trade gain for you guys, okay? So I think that's a pretty easy 30% swing trade. I shouldn't say it's easy because Peloton does have risk overall, especially because they shot up so fast with the whole pandemic. Everyone was at home. Now everyone's not trapped at home anymore, so that's why their stock's dying down a little bit. They've also had some malfunctions with the equipment going on and everything too. But overall, I think that this is a pretty good swing trade, especially if we see it go down as low as $85 and below $90 per share. I think there's some good buying opportunities. I think this is even a good long-term stock, honestly, too. You know, I think Peloton is going to be around for at least the next 2 to 5 years. Okay, so let's talk about Disney because it's down a little bit too. So a lot of people are asking about Disney, wanting to know about Disney. You can see they have a big 3-month support line that they broke. So it's the lowest they've been in the last 3 months. And if you take out your drawing tool here again, and you kind of draw where we saw some supports and resistances, you can see that Disney could even be a good swing trade. It's close to a support right now. You want to see it a little bit lower, but the good thing is Disney's an amazing long-term hold. So this is one that I want to be putting in my Roth IRA, never selling, holding for like 10 years. This is one you can easily hold for 5 to 10 years. You just set it and forget it, especially because not only do they have Disneyland and obviously what their whole business was founded on, but now they have the new extension with Disney Plus, which is basically giving them like pricing in like Netflix as a whole side company on Disney. So don't forget about that, okay? They're a $300 billion market cap, but they have the streaming service, and I think over the next 5 years, that streaming service is just going to get so much more seasoned and so much more better with Disney Plus on their radar. So Disney Plus is a big thing a lot of analysts are forgetting about because remember, it's a new part of their business. It just started like this year. It's less than 2 years old, Disney Plus. Okay, so in the next 5 to 10 years, it can grow substantially. So this article is saying talking about Disney World, Disneyland, but the 50th anniversary event is already driving demand for Disney World tickets, which is some good news for shorter term investors. Higher prices and new upcharges will drive revenue per guest. So they are raising all the prices, the tickets, lower capital spending as they open. Previously built attractions will improve free cash flow. All right, so they're not having to open new ones, but they're actually reopening previous built attractions. Disney shares have been on a run this year, largely based on the success of Disney Plus streaming services, which has blown past expectations to become the strong number 2 in the streaming market. Wow, above Hulu, above HBO Max, above all those other guys, above Amazon Prime. That's amazing to see if you are a Disney holder or if you're thinking about buying Disney for long term. In fact, some analysts have contended the company could actually take the global top spot in streaming from Netflix within a few years. So that would be so huge if they are able to pass Netflix in revenue and subscribers. That's basically tacking on a whole new business model that was just founded this year or just last year in the last 2 years. However, that saga has been extensively chronicled elsewhere, and this article is about their theme parks. Arguably, the portion of a company with the strongest emotional draw for the consumers. The theme parks were also the portion of the company that was most deeply affected by the whole pandemic, but all is not lost for the theme park front. The company is coming out of a period of significant capital spending over the last few years as they built a completely new park in Shanghai, if you guys remember that. They built the Star Wars land in both California and Florida. And let me know if you guys want me to dive a little bit deeper into Disney. I know we dove a little bit deep today, but a lot of people are obsessed with Disney and want me to go deeper all the time. So let me know if you want to see that. The analysts are saying 23% upside over the next 12 months. I see a little bit more. I see more of a 30 to 40% upside, especially if you get in under a 170 and closer to 165 per share. Here where you can see where the analysts are coming from. We see a little bit more 3-star analysts, some 4-star analysts, but we still see a lot of 5-star analysts coming from Morgan Stanley, Goldman Sachs, and other good places that are saying above $200 for Disney in the next 12 months. Now, I didn't want to draw the video on too long, and if you guys want to see more content from me, and if you like how I explain things, make sure you leave a big thumbs up on this video. If you want a part 2 of this video, comment below what stock you're most excited about from this video. And if you want to join my close friends list, and if your profile doesn't really look like this with the 40% per year or more, because often our account is above 40% on the year, this is just on the lower end that it is right now. Go ahead and reach out to me. Reach out to me here on Instagram. We have 121,000 followers. And if you click here and you look at success number 4, we have over 400 positive testimonials on Instagram now of people absolutely loving the program and seeing success for them as well. This is my last 3 months, up 77%. You can go over more if you if you actually look through all the success number 4. There's success number 3 that we completely filled up. That's why we had to obviously make number 4. There's also success number 2 and student success. Now, you guys won't see like these close friends one, the green highlights here that say the close friends list. If you're not on the close friends list already, you'll see success number 4, success number 3, one-on-one coaching, success number 2, and the original student success. So if you want to become a success story as well, reach out to me on Instagram. I'm accepting a few more people. Sundays is the best sign-up day, so that way we are ready for the trading week ahead. And if you guys want more updates on cryptocurrency as well, make sure you follow my second page, the Daily Cryptocurrency. I post Instagram TV videos all the time. 8-minute updates, 5-minute updates on the crypto market, what coins I'm buying, what coins I'm considering and looking at. And I also have a close friends list on the cryptocurrency channel too. So if you want to see exactly how much I'm buying and what I'm buying, when I'm buying it, go ahead and reach out to me about the close friends list on cryptocurrency as well. I also have a combo program if you guys want to sign up for both programs, both close friends list. All right, guys, like this video, share it with a friend if you think they found some value in it, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.